I would say right now, you can afford to buy a house if you're renting right now. You can actually afford to buy a house. So, hello, my friends, and welcome back to Intentionally Judy. And thank you so much for tuning in to follow my journey. So, today is day 48. We're counting down, right? I just want to take the opportunity today, while I'm working on this goal, to share how easy it is to actually buy a house. So whether you're a first-time home buyer or you're just looking to upgrade on your house, this video will guide you into how to make it easy and seamless. If you are strategic about buying a house, it can be a very seamless and easy process, especially the first house or your primary house, the house that you're going to live in yourself. Because I listed as one of my goals to purchase a new house in the next 50 days, a couple of people reached out to me because they were like surprised. How can you get that? How can you just decide to buy a house like that? But I just want to say, I didn't just decide to buy the house in 30 days or 50 days. I have been planning for this. And that's what it comes back to. If you're strategic about purchasing a home, it takes planning. Some people feel like, oh, it's too daunting, it's too difficult, or the process is too complicated for some, but it's actually not. And I think there are a lot of incentive for people at different level or at different stage of their life to actually get into home ownership. If you heard the news, you see how it's becoming more and more difficult for first-time home buyer to purchase their home, because with inflation, the prices are going up and the entry level is getting pushed higher and higher every single day. So if you're able to rent and pay your rent consistently right now, it means you can afford to buy a house. As the home prices keep going up, rent is also going to be going up going forward. So I will say it again, everybody can afford to purchase a house, but you just have to be strategic and prepare yourself to make that big purchase, because for most people it is the biggest purchase of their lifetime. So I've moved so many times just to be able to afford a house in a better location, or just to work with a specific budget. So be open, be flexible, and you can buy a house if you decide to do so. So let's look at what you need to prepare in order to be ready to purchase a house, especially for first-time home buyer. If you've never bought a house, of course, the process might be a bit daunting, but it's not that hard. It's actually super, super easy. So let me break it down to you. Within the next 50 days, I'll be purchasing a home because I sat down and looked at my finances and I saw that I can afford to buy a second-rate house. I can afford to pay a second mortgage. So that's the first step, the financial preparation. Don't go looking for houses and then you get, caught up in the excitement of, oh, I want that, and that doesn't match with your actual financial situation. So first, figure out your financial situation. Now, the financial preparation starts with what can you afford. If your rent is $2,000 a month and you're able to afford that comfortably, so I'll be looking at the house with a mortgage a little bit lower than that, like $1,700 to maybe $1,800 with a little bit of margin. So first you determine what's your budget, what can you afford. The second part of your financial preparation is your down payment. So for a first-time home buyer, there are lots of incentive that allow you to have to put a very little amount down as a down payment. And for most conventional FHA loan, you just need 3.5%. And in some cases, even less. You need 3.5% of the total amount of the purchase cost of that house. So if a house is $100,000, I don't think there are a lot of places in America where your houses are $100,000. It just means that you need $3,500 as a down payment. So multiply that. If the house is going to cost $200,000, you need about $7,000 for the down payment. If the house is $300,000, you need less than $20,000 for the down payment. That's the biggest part of your financial preparation, is put that money aside, save that money. Just to simplify actually purchasing a house, I will not even worry too much. For my first house, I will not worry about the PMI, the private mortgage insurance. That is the little extra cost that is added to your mortgage if you don't have a 20% down payment. So only think 3.5% down payment. The other part of your preparation is closing cost. The closing costs are the costs associated to the purchase. That's how lenders, everybody put that mortgage in place for you. Those closing costs are usually less than 6% of the home price. So again, if you're purchasing $100,000 house, the closing cost is going to be about $6,000. It's going to be around $6,000. But there are a lot of provisions for your first home purchase to get that closing cost or part of it covered with the sale. So there's a lot of ways you can wrap in the closing costs in the home purchase, and the lenders can guide you with that process. But it will be wise to save a little percentage, about another 3 to 6% of the purchase price to cover the closing costs. So a lot of people don't mention that, but definitely you need to come in not just with the down payment, you also need to come in with the closing costs. One thing that can help reduce your closing costs is your credit score. Your credit score is very important. A good credit score is very important for this home buying, but it is not a must. So don't let your credit score prevent you from thinking, oh, you can afford the house. It is not that big of a hurdle. So with a good credit score, you get a better rate on your interest. The interest rates are so high. We're talking 7% interest rate. So somebody with a better credit score is able to get the lowest rate. And trust me, the interest rate can add on a lot to your mortgage. While somebody with a little bit lower credit score might end up with a 7-8%, because that's the credibility that the mortgage company wants to have, that, oh, you're going to be able to keep paying this mortgage. So you lose a little bit of credibility there, but it's not a blockage. So during the financial preparation time, you work on your credit score, try to bring it as high as possible. It doesn't have to be excellent. Credit score in the 580, in 650, it's okay. You know, don't beat yourself up too much. You have to pay a little bit more for your mortgage, but again, you're already thinking of what you can afford. You know, you're already thinking about a mortgage in your price range, so it is okay. It will get you in, but there are a lot of things you can do going forward to get that mortgage down. We'll talk about that later though. A couple of factors that you can work on to bring your credit score include just paying your bills on time. Even if it's just a minimum payment, make sure you pay your bills on time. The other thing is reducing your debt. If you have a lot of debt, try to pay down some of that debt before you even start looking for mortgages. So that will help elevate your credit score. So those are the two things everybody you can start working on right now if you want to purchase a house in 6 months, maybe a year. So that will help drastically change your credit score. I will show you quickly how I've been working on my credit score, and I actually had a big jump, 100-point jump in my credit score, and that gave me a bit more confidence to go ahead with this purchase that I am planning to do before the end of the year. So that's a very big important step in your financial preparation before you purchase a house. Be very strategic about that and try to stay within your means when you're looking to purchase a house. When I say I am ready to purchase a house, I am ready because my financial preparation has been done. My credit is in a better place, and I have the down payment, I have the closing costs for the budget. So I'm limited. I am limited because of how much I have as down payment and closing costs. I'm not going around looking at houses, you know, in a certain range, because I know my budget is limited to this. So that's the guidelines that you have to, before you even start looking at houses. Trust me, you don't want to start looking at those expensive houses and then you can find that you cannot afford them. Once you get those your financial preparation, you get your finances in order, you need to prepare your financial documents because lenders are going to need that. You need to get your W-2 together. You need to have your tax documents, the tax return, the pay stub, the bank statement, the proof of assets. Get that ready, get that in the file, and that will be pretty handy as soon as you start shopping for lenders. So get all your financial documents ready. And now you can start shopping for lenders. You are looking for a lender who is gonna basically loan you the total amount for the house purchase, right? So if you can purchase a house for 200,000, the loan company is gonna give you 200,000. It's gonna secure the house for you, and you're gonna pay them back monthly with your mortgage payment. So you have to go around and look for the right lender for you. The first step when you look for a lender is to shop around. You have to call a few lenders and see their rates, see their fees, because their fees make a difference, right, in the total closing cost. So that's why you need to shop around to try to get the best rate and the lowest fee possible. Let me tell you, once you start talking to lenders, it's like your information is shared all over the place and lenders will be calling you. I think now more than ever before. Last time I checked, I looked for a lender and I had one lender pull my credit, my financial information to check what I can afford. Oh my goodness, I got inundated with phone calls from mortgage company, from loan officer all over the place. So you don't even have to go looking for other lenders. They're going to be calling you as soon as you have an inquiry on your credit for a home purchase. So, but you have to select 3 to 4 lenders and talk with and see how compare the fees and everything. That lender is going to give you a pre-approval letter. The pre-approval is just saying that after review, we know that this person can afford a mortgage up to this amount. So they'll give you the pre-approval letter, and now that's the letter and the validation that you need to use to go shop for the house. So don't go shopping before you do all of these. The next thing is to find an agent. Try to find an agent who knows the market and who can guide you and help you come up with good strategy on, staying within your budget. Very important. And also neighborhood location, and help guide you through this process. Try to stick to that budget. Don't let anybody tell you can afford more, push you for more. No, try to stay within your budget. And the features that you want, the must have, what are the things that you really want to have. And that list has to be a little bit flexible, because given the market you are in, you might want something, but you cannot afford it. So focus on the things that are most important, like the location, reviews, and and the school district. If you're a parent, focus on the main things. And when it comes to features of the house, be flexible in that. You can now go house hunting, but please stay within your budget. Don't go looking for houses that are outside of your budget and try to convince yourself that you can afford it. Please, this is a big lifetime decision that you cannot just take lightly. So once you are in the process of purchasing a house, you have to be very careful to not go buying stuff and mess up your credit again or increase your debt. That's very, very important, because a lot of people, they're in the process of home buying and they go make some purchases that push their debt to income ratio up, and now the lender cannot guarantee the loan. And then maybe they find a home, they make an offer, and by the time they get to closing, the lender is like, we cannot cover this, because now your debt to income ratio doesn't allow you to purchase this house. So be very careful, be very frugal once you're in the process of purchasing a house. Wait until you close on the house before you go buy furniture, before you go make big purchases, and avoid any of that. And also don't borrow money from friends and family when you are already in the process of getting a house. If you need some money beforehand. While you're still preparing for your finances, make sure you make those arrangements before you get the approval from the lender, because they don't want to see money coming in and out of your account from untraced sources. So be very careful about that. And again, don't go shopping. If you need the cash, wait until you have the house and then you go purchase the cash, because that will affect your debt to income ratio. And if your debt to income ratio goes up while you're in that process, the lender might not be able to give you that loan. So be very careful about that. Now, if you find a house that you're comfortable, you like the location, you like the house's feature, go for it. Put in an offer and try to negotiate as much as you want to get the best rates, and that's it. When you put in an offer, it is a contract with the seller, and you cannot easily back out unless you have some contingency that allow you to back out. You have to put in a deposit when you place your offer. The deposit is part of your down payment. Once you put that down, if you back out of the contract, the seller can keep your earnest money deposit unless you have some contingency in place that allow you to back out. And I would say, don't hesitate to back out if you find something that doesn't resonate with you. If you say you do the home inspection and inspection report has a lot of things you're not very comfortable with, and the seller is not about to fix, be ready to back out. So don't get so emotionally attached to the house that you want to ignore some red flags. So that's it. Now it's closing day. You did your due diligence. You did not make crazy decision while you were looking for the house, and now the lender is confident you're going to be able to pay your mortgage. So now you go to the closing table. The closing table is when the seller pass on the house to you and all the deeds and keys and everything that you need. So you got a house. It's not that complicated. Not everybody wants to own a house. So if that's your goal, do it now and don't wait. If you make up your mind in the next 6 months, you can get a house, especially your first time home buyer. It is more difficult when you're looking for your secondary home or an investment property, because with those, you have to have a bigger down payment. And usually that's at least 20% down payment for the house. So I've learned with time, if you're willing to make some sacrifices, you can actually make it a lot easier on you by finding other strategies to make your house be an asset and not just liability. I will talk to you about that in another video. Don't forget to like, subscribe, and share this video, and I hope this helps you or somebody you know, right, to get over that fear and take action and purchase a house. Thank you so much for watching. I'll talk to you tomorrow.